welcome to this month's Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and finreg news. Now, there continue to be lots of discussions across the globe about the topic of cybersecurity, in particular, the topic of frontier AI models. Now, last month, I should say, I was talking about Mythos, or Claude Mythos from Anthropic, and how the industry had been discussing how much of a risk that poses because it was restricted to only US organizations for a while. That has now changed, which is good to report. But there have been some developments internationally with regulators warning about the wider systemic cyber risks that are posed by models such as this. And I was at an event last month as well, looking at open source technology development. And one of the speakers there said, obviously, Claude Mythos is one of probably many of such models across the globe. There are probably many more out there that we just don't know about. So certainly in light of things like the Digital Operational Resilience Act in Europe and the AI Act, understandably, the European regulators have been quite concerned about this topic. A couple of months ago, there had been discussions about slowing down the AI Act. It was actually delayed this month, so we did get the announcement about that. So certainly that has happened, and there are going to be some tweaks to it as a result of that. Some of it has been delayed by 4 months, some of it's been delayed by 6 months, and some of it's been delayed by a year or year and a half. So it's quite a complicated and lengthy act or piece of regulation that needs to be reviewed by all of the European regulators before it can be implemented. So certainly it will take a little while if there's going to be further tweaks to some aspects of it. But in the meantime, we have seen the European Systemic Risk Board issue and a warning along with the other European supervisory authorities, the EBA, EIOPA and ESMA, who are known as the ESAs, related to systemic risk stemming from frontier AI models. So there has been a lot of focus on this within the regulatory community. This warning is to ensure that all of the work that regulators are doing around monitoring this stuff is ramped up a little. So expect many more communications from your national regulators, your friendly national regulators on this topic in the coming months. But certainly it is a high priority for all of the regulators at the moment. In other European FinReg news, we saw the European Commission adopting new revised European sustainability reporting standards this month. That's sort of a scoping down of some of the reporting that has to be done to the European regulators on the ESG side of things. So things related to governance, climate change, biodiversity, and human rights. So these are obviously these revisions are expected. They're not unexpected, but they are designed to reduce the administrative burden on some of the smaller firms out there. So it's become a voluntary scheme for them to report the information, whereas previous to that, it was mandatory. So we are seeing all of this as part of the omnibus simplification package that was announced last year. And there's a reduction in the number of data points that must be reported by all firms. So that's down by about 60%. Which is, obviously important when it comes to the cost aspect of reporting. So interesting to see that sort of continue to progress. We saw the proposals last year. They were long awaited. As I say, in the US, we've seen full stepping back from ESG reporting. The SEC last month announced that it was getting rid of those requirements. I think it's a bit disheartening, I guess, on that front from the US side. Understandably, obviously, burden reduction is one thing, but removing requirements is quite another for the investor community. So certainly many will be disappointed about that particular topic, given we have seen a lot of impacts of climate change across various parts of the world this year, including ever increasing heat in Europe and in the US in the last month. So certainly, and that is causing increased climate risk that I guess will not be tracked as well with regards to stepping back from reporting some of this data and from forcing firms to monitor some of this data. So definitely a lot of things to think about on the ESG front. In terms of market structure change, obviously we've had some moves this month related to the move to 24/7 trading in the US market. The NSCC, which is a subsidiary of the DTCC, has announced that it's able to support 24-hour trading should firms wish to take advantage of that. This obviously involved a fair amount of work, or 24/5 trading, I should say, which the DTCC has obviously been working on for quite some time. And that is, it's something that's important to put in place ahead of the exchanges moving that direction. That's expected to happen in the fourth quarter of this year, although that may get delayed. We've definitely heard some rumours that the market data aspects may take a little longer than expected. Certainly the rest of the world is interested in this particular topic. We've had a lot of European discussions on this front, so definitely interesting to see that sort of development there. Other aspects with regards to market structure change, we're also seeing more movement from T+1 in Europe. We have seen more standards being confirmed and a lot more progress with regards to the industry adopting market practices. The deadline for that, just to remind you, is the end of December this year for all the middle office changes. It's not next year, but because next year we're going to be doing a lot of the testing. So definitely something to bear in mind. From the fintech front, it was interesting to see this month that Robinhood, everyone's favorite neo broker in the US, has run or launched its own DLT platform, the Robinhood Chain Mainnet. They didn't link it to the topic of Robinhood. They didn't call it Sherwood or Sherwood DLT or anything like that. But that's something they are focusing on as part of their global expansion. Part of this is obviously trying to link to the widening product sets they're looking at from the tokenization side of things. It has been a big focus for them. It will be interesting to see how much take-up they get. Obviously, Robinhood has had some operational problems over recent years. We've seen some hiccups, not least of which was why we ended up with T+1 in the US because of their risk and margining issues in several days with regards to the meme stock sort of machinations that happened in the US in 2021. So certainly it will be interesting to see how successful the DLT platform is. Lots of people, lots of incumbent brokers across the world will be keeping a close eye on that. Certainly all of the large providers are always interested in how the newer entrants to the market, although they are now established, how they are adapting their business models as time goes on. And in other news as well, there are a lot of consultations going on with the CFTC at the moment, not least of which is the perpetual futures consultation. I know that's sort of set some cats amongst the pigeons, a cat amongst the pigeons with regards to the CME being not very happy about the classification of perps as they are known. So there is definitely something to be said for listening to the consultation there, seeing what kinds of reactions you get from the industry as a whole on this topic, both traditional players and also the newer crypto-focused players, or I should say tokenization-focused players. Definitely interesting to see how perpetual futures are expanding. We're seeing a discussion about them in Europe as well. I believe there's been discussion about them and predictive markets. So where that develops and how that goes with regards to some of the aspects of consumer protection or investor protection is a big question mark at the moment, and which markets are keen on that versus others remains to be seen, but certainly something to see from an international front. Now, another thing to look at, and certainly from my thoughts for the month, my final thoughts center on the topic of open source development. And certainly that was something that I was very interested in listening to at the FinOps conference earlier or last month in London, listening to how those open source software developers are sort of attempting to coordinate and collaborate to reduce threats from the cyber criminal community, particularly when we're thinking about frontier AI, which I started this episode on. Definitely collaboration is to be commended in this particular space. Obviously, there is a spectrum of security. Open software development does, as its name indicate, mean that things are on an open platform, are accessible. to cyber criminals as well as coders themselves. So certainly security is of a big interest for that community, and things need to be deployed at speed, at scale, and coders need to be kept up to date and to be able to put in place patches to be able to combat cybersecurity or cyber threats that may arise across the spectrum of different attack vectors we have in the current market. So definitely interesting to see how that community is collaborating. It sort of shows that wider industry collaboration is possible. Open source software is built on the theme of collaboration and constructive building across the industry, with the goal of having your own competitive elements in certain other areas. But certainly there are many projects where we can see industry collaboration. It would be lovely to see fewer industry standards bodies as well. I see a lot of duplication, a lot of effort that is going into certain standards groups that's going into the same thing, similar goals, but they are not connected to each other. So it would be lovely to see the capital markets industry collaborate a little more effectively across communities as well as within them. But definitely something to bear in mind as we look at sort of operational efficiency as an industry as well as at the firm level.